Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Lee Kian Soon, CEO of Austral Asset Management, coming out of Singapore. Now, Kian Soon, as always, great to have you on the show.
Good afternoon. I'm glad to participate.
Now, Kian Soon, before we get your insights, let's take a look and see how markets across the region are performing. But let's start with the cryptocurrency markets, where Bitcoin has breached the 40,000 mark. It's at 38,841.3. It's down 7.31%. Ethereum it's also below the 3,000 mark. It's at 2,867.48. It's down 8.21%. Now, across stock markets in the region, we start close to home with the SGX. It's at 3,292.73. It's down 0.06%. If we look across the region, the KLSC is at 1,523.78. It's down 0.26%. Shanghai is at 3,525.38. It's down 0.84%. The ASX All Ordinaries is down sharply. It's at 7,489.2. It's down 2.34%. The Nikkei is at 27,325, down 1.61%. The Hang Seng is at 24,777.5, down 0.7%. And rounding up the numbers, we've got the Kospi, which is at 2,819.31, down 1.52%. Kian Soon, what's your view on the sea of red across the region today?
I think there are multiple factors. At least for Hong Kong and China, they really have a good run yesterday with the announcements of rate cuts in China. So you saw Hang Seng going up by more than 2% and China as well. So there's a bit of pullback today, which is hardly surprising. On the other hand, the other key markets, I think, are affected by multiple folds of developments. For instance, the US markets didn't end up too well last evening, and I'm sure that has a spillover effect on Nikkei. And meanwhile, for Australian market, it's understandable because the COVID situation there has become much more serious, and people are worried about the soaring numbers and the shortages of hospitals in Australia.
Now, Kian Soon, I think there's a lot of uncertainty around US markets right now. Walk us through some of your concerns.
I think I have a couple of concerns is because let's not forget, right, the period of low economic base in 2020 is over. So last year, US has very good economic growth, and there's a concern whether, in 2022, this growth could be repeated, which is very unlikely. The second concern, obviously, is with the threats of inflation. The central banks in US and as well as other parts of Europe are most likely going to increase interest rates, and that means increasing financial costs. And thirdly, right, there is always a focus on tech sectors in the United States, and with the rising interest rates as well as rising costs as a result of manpower costs and all kinds of other small components, it's very likely that the revenue growth is not going to be as strong. The cost is going to go up much higher, and therefore you have a era of declining profits for some of these tech companies.
Okay, then, so that's the sea of gloom. Where are the bright spots?
I think if you look at the whole market situations, I think the bright spots potentially could be in Asia, in China and Hong Kong this year. The reasons are multifold. A is, if you look at the valuations that you are seeing in Asia, in particular for some of the Chinese companies listed in Hong Kong, they are actually very attractively priced. And for value stock pickers, this is attractive hunting grounds. Secondly, right, I think the era of regulatory crackdowns and are over. So this year we'll look at more positive developments in terms of clearer guidelines and policies from the China regulators. And thirdly, I think this is a period where China actually is able to show that it has the firepower in terms of fiscal policies as well as monetary policies. We witnessed that yesterday. They are likely to have more room to trick their economy as it comes to a slowdown, and they have a bag of tricks that we could look forward to.
Now, included in that bag of tricks, are they going to turn on the taps a lot more than the initial triggers right now?
I think it's very unlikely you will see a huge floodgate opens. I think that is what they used to do, but it always leads to a myriad of problems later because opening up a floodgate always leads to, more floods later. And, as we could see, this is not a very prudent way. So the current, I think, approach would be to do it in stages, and to do it in a more controlled manner and more sustainable approach would be what the markets are looking forward to. Not to forget, there are two key events in China, the up-and-coming Winter Olympics, which is going to be launched soon, and a very important meeting in October, which is their 20th anniversary Central Committee meetings. And the Chinese government would like to make sure that the markets are stable and the outlook is good with reference to all these key events.
So, and that is, isn't it, an expectation of investors that China is going to look really good this year because that important meeting is happening in October? What are your concerns around the liquidity problems currently in the property sector in particular?
So the current liquidity issues that are faced by some of the developers I think are well covered since last year. We knew that they have a huge debt burden that some of these companies are facing. Over the next 6 to 12 months, a lot of these companies will be restructured. Their debts will be, basically downsized, and all the investors for some of these Chinese developers bond will have to take a haircut in some form or another. I think the template for restructuring has been set. Some of these companies have already started the ball rolling, and the other property development companies are likely to follow a similar approach for a lot of these renminbi bonds that are listed in Hong Kong markets as well as in domestic markets.
And so, which brings me to another point, Kian Soon, around the treatment of bondholders. There is nervousness among overseas bondholders that they would get a different treatment. What's your view on this? You're a China expert. You've been there for many years. What are your thoughts on this?
The interesting thing is when you are getting returns of 15% coupon, they never argue about the fact that they're treated differently. Yes. So all the investors, whether you're domestic or overseas, you have to be aware that if bonds are giving you coupon returns that are double digits, basically they are in the junk bonds positions. So when they're counting the coupons, I don't think anyone complained. But when it comes to restructuring, I think there is a huge issues because of the two sets of laws that is governing China and in Hong Kong. Basically, the legislation is different. But as far as I can see now, the form of restructuring that's taking place in the two locations seems to be rather fair. And we have to really see what happens going forward in terms of whether such discrepancy occurs. It's very unlikely now because I think the balance of power is fairly, more on the neutral side, that, you're not likely to see huge grievances, or huge discrepancy across two jurisdictions. After all, Hong Kong markets would like to make sure that this process goes through smoothly in order to gain the confidence of future renminbi Chinese companies launching their renminbi bonds in Hong Kong.
Now, Kian Soon, as always, thank you very much for taking your time to come on the show, and also thank you for your insights.
My pleasure.
Now, we've been speaking to Lee Kian Soon, CEO of Austral Asset Management, coming out of Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this video and podcast on our various platforms, as well as our website, www.biztech.asia. Please subscribe and like and follow our various platforms. Thank you very much for tuning in.